Welcome to Forex School Uganda. I'm Godfrey, and if you're new to the channel, kindly subscribe, like and share the video so I can continue to bring you more great content on the channel. Today we're going to be breaking down market structure, analyzing the charts from the higher time frames down to the lower time frames to see where price is and where we anticipate it to get to in the next coming few hours, days, weeks and perhaps even months, so we can prepare ourselves for early shifts and turns in the market long before they do happen. We'll be marking out areas where we expect such turns to happen, and it is within those areas that we'll be preparing ourselves for setups to form that meet our entry criteria that we can then take to maintain our edge in the market and have an advantage over the crowd and hopefully make money from the markets today. Come with me to the charts.
So taking a look at the monthly, what we see is that price rejected this area, came and rejected this area as well, and it is now rejecting the same area to the right. Now further down, we see that price tested and rejected this area of support, tested the same area of support and rejected it, tested it once again here, rejected it, and of course up here, and is now seemingly rejecting it. So drawing our lower support area from the left, this is what we see: a rejection from this area, a rejection here again, a rejection here, as well as in this area, much as it didn't quite reach it. And if you observe carefully, price seems to be forming what looks like an inverted head and shoulder pattern, which is a bullish pattern at the moment, but it's still information. It's not yet completed. So remember, we do not predict the markets, we only react to the market. Dropping to the weekly, what we see is that price right here created an area of minor resistance before breaking above it, then coming back down to retest it, and was rejected at this area, came back again, was rejected again, came back the third time, was rejected again, before it finally broke through to the downside, and now it has broken back to the upside. And if you are to draw our support area within the zone, this is what we see, that price has finally broken back above it, making this entire break a false or a fake breakout to the downside, because we see price broke below before ascending and breaking back within the consolidation to the upside. And so this entire move was simply a liquidity grab to catch early sellers off their guard before price taking an upturn and moving back to the upside after grabbing liquidity from the early sellers. What we also observe here is that price has broken and closed above this minor resistance area with this bullish close. And so what we could see in the coming few days could be a retracement to retest this area before a move to the upside, or a deeper retracement to retest this area before the move back to the upside. Now, should it drop further down to this lower support area, it will be a formation of an inverted heads and shoulders pattern, which is also a bullish pattern, indicating to us that price still has some bullish pressure, and so we could see price continue on its way to the upside. Now dropping down to the daily, on the daily of this Euro USD pair, what we see is that price created resistance right here and has now, with this bullish move to the upside, broken and closed above this resistance area, and it did so with this bullish candle, but with this bearish candle it retraced to retest this same area, and now finally with this bullish close with a long rejection wick to the downside, but with a bullish close, it indicates to us that there's now new bullish momentum coming into the market to push this price further up. And this is a typical break and retest pattern, that is retesting and rejecting at this resistance now turned support area. And if we bring our Fibonacci tool and measure from the low of this upward move to the height of the move, to the peak of the move, what we see is that price is testing not only this support area, but also the 38.2 Fibonacci retracement area, making a confluence of both support as well as the Fibonacci retracement area as possible rejection zones or points. So these two confluences give reason for our bullish sentiments concerning price continuing to the upside. But like I said, we do not predict the markets. The markets are all about probabilities. You let the markets do what the markets want to do. We can never know where price wants to go or where it will actually go. The best we can do is to analyze the markets and prepare ourselves in such areas for whatever scenarios the market presents to us. All we will be looking for are the setups that meet our entry criteria before we can execute, and that will be done within the lower time frames. It's just that we have to do our analysis from the higher time frames down to the lower time frames, because the higher time frames hold more ground as far as market structure is concerned and the holding of price within its movements in the market as compared to the lower time frames. So you could trust the higher time frames much better than the lower time frames. And so once again, we are not trying to predict price. We are only going to be waiting. We're only trying to analyze the market, and we will be waiting to see what the market will do before we can react to the actions of price. And that's what makes us price action traders. But from the look of it, just on the face of it, we could see price move continue to the upside after this bullish close upon retesting and rejecting this support area. Now, dropping further down to the 4-hour, what we see on the 4-hour is that price broke and closed below this minor support area with this price drop to the downside, but now it has broken back to the upside and broken above the previous support, now turned resistance to the left. I'm talking about this, which was acting as resistance as price broke back within this range of price. But again, what we see is that it created minor resistance here, and price with this upward move has retested it and is being contained within this consolidation area. Now, what we could see come next could be a retracement to retest this area, and if the retracement happens and price is held within this range, then we could see a push back to the upside to break above this resistance area and possibly come into this higher rejection area, or call it a resistance area. And if such a move happens, we will have a formation of what looks like an inverted head and shoulders pattern, which is also a bullish pattern, further adding to the confluences that we have informing our sentiments and bias as to price still being bullish. Remember, we are just analyzing the market. We are not trying to predict the market, as it's all about probabilities, but we are trying to see where we could have better probability of price moving within our favor. Now, looking at the order flow, the flow of orders from the big players in the market, especially the hedge funds and big banks, by taking a look at the COT data, that is the commitment of traders report. The data we have here is that of the euro, but we know that all currencies on the spot market are traded against the dollar, and so if this data is that of the euro, it means it is that of the euro in comparison with the dollar. When you see these longs, it's longs taken in the euro against the dollar. When you see the shorts, these are shorts taken on the euro against the dollar. And so if we look at the last 3 filings within this longs column, now longs are the same as buys. We see the week before, the filing was of 167,000 longs that had been taken in the market. There was an increase the next filing to 170,000 longs, and now the current filing is 178,000 longs. You can see the longs have been increasing, and we can expect further bullish movement of price in the market in the euro USD pair, because the longs have only been increasing. Now when you look at this shorts column or the sales column, we see the other week there were 173,000 shorts. The following filing had a lower figure of 166,000 shorts after 7,000 shorts being closed, and now the current filing is 161,000 shorts. The shorts are just decreasing and decreasing and decreasing. That means the big boys in the market are liquidating their sell positions. They are closing out their sell positions, and we see that previously they had closed 3,000 sell positions or short positions. Then the next week they closed 7,000 short positions, and now with the most recent filing they have just closed 4,761 positions. Now when it comes to the longs, we see previously they had closed 111 longs, but then they now took more longs, taking 3,400 new longs, and now with their most recent filing they have taken 7,804 long positions within the week. So we see the longs are increasing while the shorts are decreasing, meaning the buy positions that are being placed are increasing, they are on the rise, while the sell positions that had already been taken before are only being closed within the market. Now with that, the only result we could expect is price continuing to the upside according to this data. And when you look at this net positions column, what we see is previously they had closed 6,777 longs, but now there was a jump from the negative 6,000 to a positive 4,000. That was a huge jump of 11,367 longs taken, positions taken, and now we see a further positive figure of 17,155, which is an increase by 12,565 positions taken in favor of longs. And when you look at the open interest column, we see it's only been increasing from 652 to 654, and now with the most recent filing it's at 656. We see the open interest is only being on the rise. Now from this we can only conclude that probably we still have bullish sentiment on the side of the big boys, and so we could expect further bullish pressure in the market. However, going back to the chart, there is nothing guaranteed Remember, price does not move in one direction. It moves in a series of waves of higher highs and higher lows, lower highs and lower lows, and sometimes it's rangy. The best we can do is analyze and prepare ourselves for whatever scenario comes to us. And so we could see a little retracement before a further move to the upside. But hey, again, I'm not trying to predict the market. Remember, our role once again is only reactive. We can only analyze the markets, but prepare ourselves for whatever scenario the market presents to us. The market will act the way it wants to act, and the best we can do is to react to the actions of price, and that's what makes us price action traders. And that's it for the Euro USD.
Thanks for watching. Kindly subscribe, like and share the video, and be on the lookout for the next video that I'll be posting soon. Remember to click the bell icon so you are alerted as and when that video is posted. In the meantime, you could check out forexschooluganda.com for more educational articles and content. I will see you again.